Good morning and welcome to another Market Insights video with myself, Stavros Tousios. What a day yesterday. Apparently, the Wall Street Journal article covering a potential trade deal between US and China caused a false alarm in the markets, as all early Monday gains on the back of trade optimism reversed, with dollar getting back in the game and stocks backpedaling. Now, earlier today, we saw China cutting 2019 GDP outlook to the 6.5 range as expected, and Australia's central bank holding rates unchanged, citing economic risks and a slow housing market. On the economic calendar today, we are expecting an array of PMI reports from Europe as well as retail sales. We're expecting new home sales from the US as well as the ISM non-manufacturing PMI. An important report to look just a few days ahead, NFP. And finally, we expect Mr. Carney's speech before the House of Lords Economic Affairs Committee. So it makes sense that we talk about euro-dollar as well as cable. Starting on the euro-dollar 4-hour chart, we see prices moving in a descending channel, a rejection over this level around 114, also psychological level, and since then we started seeing a corrective wave. It could be a corrective wave. Now, if we look at the last move from the top to the from the bottom to the top, we have a corrective, we have an impulse wave to the upside, and now we have finished or looking to complete the corrective move in order to complete the bullish cycle around 113. Now, if of course this level doesn't hold firm, we could see prices going all the way down to reach the bottom, the lower trend line of this channel. Now, the thing is that we have seen, we can see some sort of bearish divergence here, which have caused a correction of the markets. But if we go lower on the 1-hour chart, and I will just show you now, we don't actually see any moves that support a continuation to the upside. And that is because both RSI and the MACD are falling, while prices are falling at the same time. So that normally that signals a continuation of the trend. Now, at the same time, pay attention that this is the second corrective wave. Prices have reached the 161 extension, which happens to be the 61.8 ratio as well of the full cycle. Okay, so the 113 area is very, 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 very strong, not only from this perspective, but also from a psychological perspective, is a major support level. So in case prices are going to move a little bit higher, I would expect first a break above here and then a break above this strong level. Okay. Now, if that doesn't happen, we could see a corrective move up here where further downside moves could be seen. Now on the pound, I want to start again with a 4-hour chart. We can see we have had a good bullish move over the past few weeks. We have seen a first wave with some sort of corrective move over here, extended correction on a 5-wave cycle to the downside and a corrective up move as an ABC wave, or we could see that as a 5-wave impulse bullish move, and since the last top, a corrective cycle that could see the pound dollar going a little bit lower in order to complete the last bullish cycle. And from here, of course, further signs will be seen, but if the level holds, if this level holds firm, we could be expecting prices to move higher for another wave breaking above 134. Now I want to go down on the 1 hour just to have a better view of what's happening. As I said before, we have seen the first corrective wave, and now we're expecting a second one to come in. the Fibonacci extension shows us that prices are now at the 61.8 extension. We could see prices going down to 1 or to the 161.8. Now, the 161.8 is the one that makes a little bit more sense. It's a very good magnet support zone, let's call it, because it's also a previous low. It's the 61.8 ratio of the full cycle, as well as very near the ascending trend line. Now, do note that we are seeing a bullish divergence here. So contrary to the euro dollar, that we see pretty much a continuation to the downside. So I wouldn't be surprised if markets do correct for a little bit and reach even 132 psychological level. From there, we could see prices either breaking above to continue with the upside move, given, of course, that those levels are broken, or correct a little bit lower to the level where I'm seeing very attractive for buy orders. Now, that could end up, for example, being some sort of diagonal expanding triangle, where, you know, a breakout outside those barriers are the ones that we could be expecting to give us further, excuse me, further clues. I would pay attention to both the euro and the dollar, as well as the pound and the dollar, not only for today, but also for you know, until Thursday before the NFP, because we could see some very good moves to either reach the end of corrective cycles or hit some sort of psychological levels. So I want to thank you for one more day for watching our video, and I wish that you have a great trading day. Feel free to subscribe to our channel to stay updated about the markets, and don't forget to visit our blog where we'll cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.